What is going on, ladies and gentlemen? In this video, I'm going to be going over students' biases and rating how they find their bias and what I do differently. When I thought of this video idea, I really was looking forward to making this. So without further ado, let's just get right into it. All right, first contestant is going to be Chef Butcha. Okay. So he sent me a bunch of charts. He said draw on liquidity is the equal lows, and he marks the equal lows out. It looks like this is NQ and this is yes. It looks like there's an SMT. Respecting 50-minute BPR, hit liquidity inside for a value gap and got SMT. So it looks like these are the charts he sends me. Okay, that's the 4 hour. This is the 4 hour and a yes. This is the 1 hour. Okay. So I do really like this. Okay. I do really like this. I feel like the most unprofitable students of mine are the ones who try to find 50 different like confluences and just be like, oh, the range of the candle is this plus the standard deviation, whatever. I like this. This is simple. I really, really like how he marked the high inside the fair value gap and we're clearly delivering from it. And not only do I like that, look at how obvious this smart money reversal is, right? If I go to a chart right now, I'm actually going to show you guys an example of something that I've been, haven't talked about a lot. But let's say we form a channel and we're going up, okay? In order for me to get like an obvious smart money reversal, we need to break out of the channel. So let's say we're uptrending up. We need to do this if I want a smart money reversal, okay? Or we need to do this if we want a smart money reversal. And see how on his chart right here, see how we kind of go up in this little channel and then we go out of the channel, V-shape back down, deliver from a fair value gap. We also hit 50% of the range. Like this is as good as it gets. It's perfect. There's equal lows below. It looks like we were coming the New York session here. You can see that overnight did not do much. It kind of consolidated all night. And I would definitely expect the New York to run these equal lows. Also, another thing I like about this is, let's say you're wrong. Let's say the bias is still bullish here. Well, we're still probably going to run the equal lows, get the Judah swing, then go up. So no matter what the bias is here, there's a strong chance no matter what, even if it is bullish, that we still do run the equal lows, which I really, really do like. The SMT is also very obvious. It really stands out. I love it. And overall, A plus find, A plus strong liquidity here. And I really like how he did this. All right, next one is coming from Dan, which he wrote a message which I did not respond because I get 100 million DMs a day. Okay. Dan says daily / weekly bias. And he shows me the 4 hour chart, which he thinks it's going to go down, then up. And then he shows me the 15-minute chart. Okay. All right, Dan. I agree somewhat with this, okay? But here's the thing. This right here is like very hit or miss. It's very hit or miss if we hit this. And want me to tell you why? Look, we have an order block right here. Like, I agree that the bias is bullish, but I almost don't agree that we're going to go down there first because of this bullish order block. And like, to be honest, this was respected. Now, I will say this. We can still go down there, but I'd need to see the lower time frame to tell me more. I don't think the 4 hour tells me enough here. I don't think the 4 hours concrete here. I don't think the 4 hours obvious. I like the SMT, but I would not use the 4 hour time frame for this certain bias. So I like your idea, but I don't think this is obvious enough to use for a bias, and I think I would use a lower time frame chart. So Dan then sends me the 15-minute chart. Now I do like this. This is a lot better. This looks way better. It's more clear. This is more obvious. I like how this fair value gap is completely unfilled. It's very obvious. It looks juicy, right? There's a low here, just a juicy, wide open fair value gap below. I really do like this. Basically, this is not going to happen every time, but if I had to make a prediction, this would be it. I mean, it's perfect. And he says, bearish PDA disrespected, which I agree. You can kind of see us running through these bearish fair value gaps. We still got one up here, but we still ran through this like it wasn't even there, which is a very bullish sign. And he says he wants to see 4 hour BPR, ideally for possible longs, where I'm really confident. Yep. So I definitely agree with this. I just don't like the idea of using the 4-hour here. I think using the 15-minute here is a lot more clear, and I think this is a lot more obvious. So other than that, good job. I do like this. I'll probably give you an A- rating, because to be honest, this is hit or miss. But I do like it for like a dream scenario and something that I would play out. I would like this to play out to take a play. All right, third one by Labe X. Okay. So he sends me 2 charts, and if you're going to find the bias, you should always be checking at least 2 charts. Okay. If you're checking 1 chart, that's not enough. So he says, in this case, we are respecting the bearish gap, swept buy side, and we have an OB, unbalanced inefficiency below, and have an intermediate terminal lower, which could be the draw on liquidity. All right, there's something immediately wrong with this. He says, in this case, we are respecting the bearish gap. Is there any sign of us respecting this gap yet? No, there's not. I would need to see like a hammer candle. Basically, what a hammer candle is something like, let me see if I can find one real quick. Something almost like this that goes back red, right? This candle. I'd almost need to see that to be like, okay, we're respecting this. I get the idea, but I wouldn't say this is being respected. I think this is a very massive candle here, and there's no sign of rejection yet. Okay. So I would not declare the draw on liquidity down here just yet. I would need to see a much more bearish reaction. This is not bearish at all. This is a V-shaped recovery, to be honest. And, you know, I don't like how he's saying we're respecting it when we're clearly not, and we're just pumping at this time, right? The lower time frame is definitely pumping here. And then he sends me this chart, okay? And you can see that this is actually NQ. Okay, so I think it's a whole different bias. But yeah, regarding this one, I don't like how we aren't really respecting yet. So I probably give this a B rating for how he determines bias. I like the targets, but I don't see anything telling me we're going to hit the targets yet, if that makes sense. Okay. Then he sends me this one, IFG plus OB plus reacting off bullish for value gap. Yeah, to me, this is very obvious. I mean, we delivered out of a fair value gap here. We swept the low here. Massive giant candle. Like, I know for a fact, just based off of this, we're just going to go out the buy side just because, look, this is a reaction, right? Look, we got a green candle here. Not the best hammer candle, but after I see this, I'm going to the lower time frame, and I'm only looking for longs. This candle is going to shoot up in the next 4-hour candle. It's very obvious. I would only look for lower time frame longs here. This is definitely an A+ way to find setup or the draw on liquidity because, look, we have a reaction here. In this one, we didn't really have a bearish reaction yet, right? So great job. Work on this. Don't call this being respected yet, but I do like this one. All right, last but not least, we have Xevo. Okay, this is a 4-hour chart, swept the high inside of 4-hour for a value gap and left equal lows. Okay, so when we look at this chart, it looks like we swept this high inside this fair value gap. When I look for draw on liquidity or anything, I love the highs that sweep other highs inside the fair value gap. So there's a fair value gap right here. There's a high that rejects the fair value gap here, and we clearly respect the high here, and we got a very bearish reaction. So that's a good start. Here's the chart when it's zoomed in, okay? So we got a bearish reaction initially. We kind of come down. We don't really have a draw on liquidity at that point besides this imbalance, right? When we deliver off this and I see this candle, my target in my brain's immediately thinking, okay, we're going to go to this imbalance. It's very obvious, right? Because we have a very red candle rejecting a buy side liquidity. Now, once we hit this imbalance, I don't really know. So we're just going to wait. Wait. Okay, we have equal lows. So I do love how he finds the equal lows here. Okay, it makes sense. But I would not say the bias is just bearish yet. Do any of these candles look like it has momentum to these equal lows, telling us that these are for sure going to hit? No. And that's where some of you guys get confused, where sometimes you'll see equal lows, mark them, but just we don't really have any candles telling us we're going to go hit them yet. Like, I need to see more confirmation of us, okay, markets clearly has momentum to these equal lows. I'm going to look for a pullback. Okay, and this is where I'm going to end the video. I'm going to end it showing you guys an example of, where people mess this up. So, for example, Okay, if we go right here, okay, right here, a lot of people are saying, oh, we're going to go back to this imbalance that was never filled, right? And there was also relative equal highs. Okay, it was filled by a tick, but we still left relative equal highs here, and you know, there's still a V-shaped recovery down here. So off this V-shape, right, you'd expect this to happen. And it's not big. Obviously, these were taken by a tick here, but this is still a lot of imbalance to fill. And to be honest, this V-shape tells me we're going to go to it. And this is where you guys get confused. Does this tell me the bias is bullish? No. Did we see below here? Yes. Could you assume it's bullish here and get an early entry? Yes, but it's always going to be more risky. Now, does this tell me that we're going to go here? 100% yes. This is way more confident. This shows confirmation, and it's still not too late to get into play. You can still get in a play here. All right? Same thing with up here. Watch. Okay, right here. At this point, we left relative equal highs up here. Do I know we're going to go up here? Yes. Is the market absolutely telling me anything about we're going to go up here right now? No, it's not. So that can't be my bias yet. I can lean that way, but it's not confirmed. Now, is it confirmed? Yes. Right now, the market's telling us we have the momentum going towards it. Now I'm going to look for TP or look for plays that go to it. Right, and this is where I'd look for a confirmation setup, a pullback, a confirmation setup, right? Usually New York Open. Now, this is obviously at 6 p.m., which I would not look there, but you get the point. It works the same every session, and you look for this in New York. But it's the idea of I need to see the market telling us we're going to go somewhere. I can't just mark 11 and be like, yeah, we're going here. I need to see the market telling me we're going to go there. So that's going to end it for this video. I'll see you guys in the next one. If you want to practice strong liquidity stuff, buy an Apex account. Link in the description. Use code Dodgy. Just buy an Apex account. Take draw and liquidity plays only. And just see if you can do well just taking draw and liquidity plays. They're like $40. There's an 80% discount right now. I strongly recommend it. And yeah, other than that, I will see you guys on the flip side. All right, see ya.